Right, hi friends. Continuing our introductory module of the market intelligence, the architecture of control. This is lesson 2, the Federal Reserve System explained. Okay, these are the basics, and I believe that some of you may already know that, especially if you are more elder, so to speak, because the majority of people that are young, they don't even care to actually understand how the financial markets and systems essentially works. And the reason why we are covering the Fed, which is the US based system for now, is because, well, this is the biggest one, the most important one that everyone is monitoring and following. Okay, so once again, these are the basics. So we have to go through the module 1 to understand all the structural points of the finances and money in general, and then we can dive deep into the specific things to give you a very high market intelligence understanding. So let's begin. The myth versus the actual structure. So most people think that the Federal Reserve is a branch of the US government that prints money, like a central bank, like ECB or something, right? But in reality, it's a hybrid system because it's a kinda little bit public and mostly private. And it was created in the 1913 through the Federal Reserve Act, and it was designed by the bankers and politicians to stabilize credit after repeated panics in the late 1800s. So the Fed isn't actually just one building that controls everything. It's a network of 12 regional banks, New York, Chicago, San Francisco, etc., overseen by the Board of Governors in Washington, D.C. So each regional Fed is technically a private corporation owned by the commercial banks in its district. So you can already see and understand that because the regional Fed buildings are owned by the commercial banks in its district, you can already tend to see where I'm going, that most of the interests that the Fed is covering is based on and for the banking cartels, and definitely not the people. So those banks, they hold stock, so to speak, in their local Fed and receive a small dividend. So the real power center of the whole Fed is the FOMC, Federal Open Market Committee. And the FOMC decides on the monetary policy. So when you see a crypto Twitter or news channels, everything mentioning FOMC or FOMC decision or speech, conference, whatever it may be, it means that the Federal Open Market Committee is going to make a decision on the interest rates and monetary policy changes. Okay, so they decide on the monetary policy, the interest rates, and open market operations, and it's made up of 12 members, 7 governors, and 5 regional bank presidents. You see where I'm going, right? Regional bank presidents and 7 governors, plus the New York Fed is always included, the Powell, in the current state of, he is the president, and the Trump really wants to remove him for obvious reasons, because Fed is a private institution following, I will not go to conspiracy theories, but it's very clear to see that the whole game is orchestrated, it's artificial, right? They are following certain scripts on how the world should move forward, right? So when the FOMC, for example, raises rates, it doesn't directly change what your bank charges, right? It changes the federal funds rate, meaning the overnight rate at which banks lend reserves to each other. That rate influences every single other cost of the credit in the system. Okay? So the federal funds rate influences every other cost of credit, right? It's not it's not like the core thing that if Fed changes it, cuts rates or increases, then the banks immediately adapt and charges you less or more. It doesn't work like that. But the federal funds rate, stands at the core of every single other costs in the credit markets, in the liquidity markets, right? And the whole system. So an important thing to also understand that the majority of people, once again, they fail to see and to understand is that the Fed itself, it doesn't print money, not directly, so to speak. The physical cash, actually the notes, is printed by the Bureau of Engraving and Printing, part of the US Treasury. The Fed, it creates the money by sending liquidity, or so to speak, they are crediting reserves in banks' accounts. So when it buys a treasury bond from a bank, it simply adds digital dollars, so to speak, the reserves, to that bank's Fed account. So no physical transaction occurs. This is the foundation of the open market operations. The Fed injects or drains liquidity by buying or selling assets. They are not printing the money directly. And the Fed is independent by design, on purpose. The Fed is technically fully independent of the government. And the majority of young people, they just never get this idea. But now, because the Trump is in power as a US president, you can clearly see the relationships, so to speak, they have, because the Fed decides on the interest rates, and the Trump itself, the government, cannot influence them to, let's say, make them change the rates or make them do something. They cannot do that because Fed is technically independent of the government. They make their own decisions. So the president appoints governors, but once they in, they serve a long 14-year terms and cannot be easily removed. That's why the Trump is usually posting the tweets or the truth on his social network, saying that the Powell should be removed, that he is going to fire Powell, all of that stuff. But as you can see, nothing happened yet because it's not as straightforward. Even though he is the president of the United States, he cannot directly influence the Fed because Fed is independent from the government, right? So the Congress oversees it, but it cannot dictate daily operations of the Fed. And that independence was intentional, created to protect the monetary policy from the political cycles. But in practice, in actuality, it shields the banking system from democratic control. Okay? So how the Fed creates money from nothing, so to speak. So the US Treasury issues a bond. Then banks or investors buy that bond. And only if liquidity dries up, the Fed buys those bonds in the secondary market, paying with newly created reserves. It's all kind of digital and it's all kind of thin air. So those reserves then allow banks to create new loans, right? Every purchase expands the Fed's balance sheet, which grew from under 1 trillion in 2007 to around 8 trillion by 2024. Example, during the 2020 pandemic, the Fed bought all the treasuries and mortgage securities at a pace of 120 billion per month. So stocks, crypto, and housing all surged the liquidity wave, so to speak, because when the Fed is injecting money into the economy, the risk on assets are all surging, okay? So the Fed and the dollar's global role, so to speak, because oil and international trade are priced in dollars, the Fed's policies ripple worldwide. When it raises the rates, dollar becomes scarce, emerging markets struggle, and crypto bleeds. Okay? When it cuts the rates and expands liquidity, risk assets thrive. And this is exactly what you're seeing right now. The Fed is starting to cut rates and they are stopping, and I should rephrase it, they are cutting rates and they will start injecting money into the economy once again. And it already happened. If you monitor certain Fed metrics, you will notice that they are injecting billions into the banks, okay, already, as of November 2025 at least, depends on when you are watching the video. So in that sense, the Fed doesn't just manage the US economy, it manages global liquidity. Central banks from Europe to Asia watch its every single move because the global debt is denominated in USD. Okay? So they are influencing everything, the whole global credit system. Now, the owners of the system. So, each regional Fed bank, like the New York Fed, is technically owned by the member banks in that district, like JP Morgan, Citi, Goldman Sachs, and others. They don't control policy directly, but form the backbone of the reserve system. So this is why a lot of people and critics say that the Fed serves banking interests first. It stabilizes the credit markets to protect the balance sheets and definitely not the citizens. And it of course makes sense, right? Because people, working class is at the lowest possible level of the whole system, so to speak. So the core idea is to help and manage not the people, but the actual biggest financial institution, so the system cannot keep on running. People will not rebuild the system if they help them, so to speak, from a very high level basic perspective. But if you help the biggest financial institution so the system can keep on running, right, so nothing collapses, they have to help them instead of helping just a regular working class. So for example, in 2008, the Fed's first action wasn't some sort of a stimulus checks to help people. The first action was lending trillions in emergency liquidity to large financial institutions, right? Save the system first. Now, the interest rate game. So this is basically what you have to follow, so to speak. The Fed has three core tools to manage global liquidity. Federal funds rate, which is basically the cost of interbank loans, then open market operations, whether they are buying on or selling treasuries, and then reserve requirements and the interest on excess reserves. So that control over how much banks can lend, okay? When the rates fall, the credit expands. So when they rise, money tightens, right? So historically, rate hikes always preceded recessions. 2000s, 2008, and 2020 tightening cycles. I'm not saying that this is fully on purpose manipulated based on what the future holds, right? But in some case, you can definitely feel this way because the 2008 was heavily influenced and manipulated. That's when the Bitcoin was born, right? 2020 also happened. We all know what happened in 2020. I don't think it's an actual thing, but it was a purely financial game. Then we have all the wars, then we have everything. They're doing everything in their power to find an excuse for certain economical stages, right? Because they know how the future is going to look like, so to speak. Trust me, they know everything, what's going to happen in terms of financial system, resets, all the 2030 green net zero agendas. All of those things are purposely made, but they cannot change the system or change the operations like that, because then people will start fighting, people will start riots, question everything, etc. So it's a very long process through the ups and downs to actually influence people's mind, enable control, but also give them hope. So now when the Trump is acting as a president and he's pro crypto, it's not because he is a pro crypto and everything is now happening because he is saying this way. This financial shift from fiat currency to digital currencies was pre-planned since I don't even know when, but definitely way before 2020 even happened. So now there needs someone to step in and act as a voice that, oh look, a crypto is actually good. So the President Trump is doing exactly that. He's following the script and he's going to each day saying certain things and enabling this new transition. But this transition was already pre-planned way back. Okay, so this is what you have to understand, that everything that the Fed does, everything that these financial markets does is in fact moving towards the next generation of some sort of a decision that was already made. But because the world is big, everyone has their own egos, people, economies, structure, citizens, everything. It cannot happen like that. It needs to happen over multiple cycles, going up and down, easy periods, difficult periods. And every difficult period makes the future less easier, so to speak, through inflation, less buying power, etc., etc. People don't buy assets, people don't invest, people just try to survive, right? And they think it's risky, etc., etc., based on the education that they were given. So it's a completely big different topic that I'm not going to cover for now, but just to have you a bit of an understanding that the whole system serves the system itself. Now, why it matters for you, everything I just said about the Fed? Well, every crypto bull run, stocks rally, and real estate boom begins with one single event. The Fed expands liquidity. And every crash follows the opposite, liquidity contraction. What we are seeing right now is the Fed starting to expand liquidity. They just recently started to cut the rates, and they just recently started to announce the plans to actually start injecting money into the system. Okay, so if you want the real market intelligence, you should monitor and constantly follow and track Fed balance sheet, okay, the FOMC calendar to know when what's happening, especially the interest rate decisions, and then the federal funds rate expectations, whether they're planning to cut, maintain, or increase the rates. So these three indicators already explains more than 90% of global risk sentiment. Whatever happens in the market is based off these three tools, these three market indicators, these three metrics. Okay, if gold moves, if Swiss franc moves, if a Japanese yen moves in a specific manner, all of those movement is based because there were changes in US dollar and Fed decisions, right? Risk on, risk off, risk on, risk off. So there are assets that are acting as a safe havens. So when the economies, especially in the US, is struggling, so to speak, there is imbalance and uncertainty. What's happening? Government shutdowns, economical cycle, weird decisions. The Fed is not aligned with the president and the economy itself. All of that stuff creates uncertainty. Then assets like Japanese yen, Swiss franc, gold, metal, safe haven, like even crypto in these days, Bitcoin, is starting to move because there is something happening in the markets, and because people would think that, oh, but why would someone transition, blah blah blah, if just a slight change happens in the US economy. Remember that there are so much money available in the markets that even the slightest change in tone of how the Fed is speaking, or what the Trump is doing, all the tariffs, etc., even the slightest change in that is influencing trillions and trillions of dollars. So if they can move the money towards safety, so to speak, all of the funds, investors, etc., they will do that because they are not operating with a few $100s or a few $100,000. They're operating in billions and trillions of assets, right? So this is the core element. So all of the system is designed in such a way, and the Fed sits pretty much at its core, at least for now. Who knows what's going to happen in the future? There used to be some conspiracy theories that there is a plan to end the Fed, so to speak, and the Trump can be one of the actors to actually initiate that through years of service, blah blah blah, and he will eventually be like, okay, and then the government, the Congress, something's gonna change when the Fed will end up being no longer existent. This could be an option, but I don't think it's gonna happen based off the fact that the system needs to keep on running. They will not change the system, they will adapt to a new system, but it's still going to be based under the same control mechanisms. And Bitcoin is not a savior, in my opinion. It's just a tool, one of the tools to influence people and give them kind of hope, and at the same time give them understanding, and how to say it in English like properly, is basically acting as a tool to see how easily people can adapt to digital transactions and blockchain technology. But at its core, it is not going to change the financial system. It will be part of it, in my opinion, right? And the governments, the companies can use it as an storage unit of capital that is not affected by inflation, but it's not something that is against the government or against the system. It's going to be influenced and promoted like that, but at the end of the day, it's actually part of the system, but from a completely different angle. But it's not about this video, it's not about that, it's just about the Fed and how it works. I just get ahead of myself sometimes to start covering topics that is not on that exact video, so I will stop. So now I just explained very core basics of how the Fed works and what kind of metrics and indicators you should follow to have a market intelligence, basically from the basic level on the Fed movements. Because trust me, a lot of people that invested in crypto has no idea what is the current Fed rate. They have no idea when the Fed will meet, and they have no idea what FOMC stands for. But they have a lot of crypto. But it's not because of the actual understanding of these things. It's just because they bought, because someone else told them. They followed an opinion. So this is the core idea of market intelligence program in DeFi House, to show you and explain you how it all works behind the scenes, so to speak. Of course, I am not claiming that I know everything how it works, but through so many years of experience and meeting different people from the very high level banking, it's essentially just a bit clearer on how it all works and what kind of tools are being used to control the masses, to control the mechanisms of the global financial institutions, so to speak. So that's it for me now. I will not go ahead of myself too much, and I will see you on lesson number 3. Thank you.